shuttling things out of the room at the end. I've got something to. I don't even have my water. I had to make a lot of sacrifices to get this done.
Yep. The live stream. Everybody needs it. Everybody wants it.
Oh yeah, I see. I um. Let's see.
I'm
All right.
here. The stream, I think.
Yeah, no, I was like it
Okay.
was running. I was watching it for a second. I was mesmerized. Um, all right. So yeah, a lot to talk about today. We were late, so not as big as our usual audience, but hopefully they'll get notified and join soon. I just got the push notification.
hmm
So yeah, let's dive in. What's first on the docket?
Yeah, so I wanted to start off this week by actually recalling stuff we've said in the past, I believe 2 or 3 weeks. So you made two great calls. First on the AMC and Ape situation, and then on the turn you made after being bullish the whole year, really, really signaling to everybody that there was a big switch up going to happen in August. So I wanted to begin by commending you on those two calls and just saying, good job. Like, really.
Yeah, I mean, it's one of those things that like I was really like I'm obviously very happy about it for a variety of reasons, but also like I think sometimes when something works a certain way, people might not or might lose focus on the fact that it can work in other ways too. And obviously, there we're just looking at like mainly like the relationship between QQQ and SPY and option sentiment. And that's what's really cool because last year I did like a lot of trading specifically on QQQ option sentiment, but that was more about like the relationship between that index option sentiment and then just like stocks generally. Like, but this was like a relationship between SPY and QQQ and kind of like a light bulb moment that it meant that the market was overvaluing tech stocks and there was like going to be a correction soon. And obviously, like, uh, there was some signaling, especially when I saw and I talked about in the newsletter that I did see, things getting fairly overvalued tangibly too, where it's like not only that, I saw that behavior in the options markets that people were, kind of over speculating and as a result getting more nervous about betting on tech long term than they should be, obviously, because the big thing that I noticed was that SPY net option sentiment and QQQ net option sentiment were converging, which should never be the case. QQQ should always be higher in a healthy market for speculation and higher by a good number. We even saw it this year, 40, close to 50 points above SPY net option sentiment, as people were starting to speculate on tech. And that was one of the things that really clued me in that tech was going to be huge. So yeah, it's like, it's super helpful to get it in like the market direction as well as the single stocks. And obviously, the power of using them together is really what makes the newsletter so accurate, and we're back. We were down to 76. And this just shows you how important market timing is. We were 76% in excess of the S&P 500 2 Sundays ago. And then this past Sunday, we were back up to almost 110% in excess of the S&P 500. So yeah, we're talking about like a 40% swing, close to it, just because we had some, we turned around, we went short, we took our gains on our longs, and then just like built a big short portfolio. And Moderna and NOX, those were some big winners, but we even are just like working in some smaller ones too. And obviously last week it was great because ELF and Booking were two of the stocks that went up last week when not tons were. So yeah, that's like that's obviously like a big help. And yeah, we're just like, it's always very satisfying to see the platform that we built to work in all these different ways, work in all of the different ways. And like, so people can see it's not just like, oh, hey, look at it for Tesla net option sentiment. Like it's a lot more than that. I happen to just focus on, where I see the most opportunity, and it's built to broadly identify opportunity is what I would say. And that's why everything is scaled. So it's really easy to see where these indexes situate versus individual stocks, where individual stocks situate relative to their, traditional values. All of that stuff offers a tremendous amount of informational value to me.
And so you made a big change in your whole theory of the market last week. Is there any big news to announce this week, or is it kind of a similar story?
No, I mean, I would say the fact that like we do, I do want to take a look at QQQ net option sentiment now that you mentioned that, because it did curve up a bit at the end of last week. So a bigger curve could mean that we might see a bit of a rebound here. But SPY was staying pretty low. Yeah, QQQ's at 11. It's in a bit of a recovery. It actually went down to zero. That was the first time I've ever seen it at zero. But it and SPY net options were both at zero at a point last week. SPY is at 5. So yeah, we are seeing a bit of a recovery, and like yeah, you see it like it's a decent day, but like I'm I just think that where we're at, I think someone online put it in a certain way that I like agree with, where it's just like I don't necessarily see any kind of macro forces that would push the market up right now, because I feel like even people being like excited about AI, like that's already people being excited about tech. A lot of that like got priced in and more. So like I would say that's like a big growth area to be excited about. But the question is like, is that investable right now at these valuations? Like maybe, but like I can't say that confidently. So yeah, like I think we'll see like some of this stuff has got to shake out, and we have to see how inflation goes. We obviously have to see rates as a result. I think we're going to have to see how earnings start to come in as like we start to see, things like the credit crunch that we'll talk about later. And we have been talking about, and like, yeah, the beginnings of, kind of what we saw this past month, like quarter with Chipotle, where it was something that has just like steady growth, that you can count on. Like that's kind of a sign that people like them not seeing their steady growth is a sign that people are maybe starting to cut back, and maybe even starting to like get less Chipotle, make more food at home. Like things like that are stuff that need to play out. But like to the point, like I don't necessarily see a lot of things surprising to the upside in the short term and moving. Like I think there's much more risk on surprises to the downside, before we kind of see this all shake out in the economy.
And speaking of Chipotle, we had the knockoff Chipotle, aka the Mediterranean Chipotle, Cava, which is reporting this week. And earnings season is basically over, but there's a few more interesting names I wanted to mention that are going to go this week. So I said Cava, also Home Depot, Target, Walmart, and Palo Alto Networks. And I wanted to ask you, are any of those interesting to you before earnings season is officially basically over?
Yeah, I think Palo Alto is pretty interesting. It's a stock that we've liked in the past, but became much more bearish on it. I think especially like I think we were even at ahead of like some disappointing results. But obviously, like if you're talking about a growth company, like Palo Alto and Networks will grow, and I think it's like a 70 growth and a 62 profitability. So from that respect, it's doing well. It is trending up nicely in that option sentiment. Upside breakout and downside breakout is going down. So that is the kind of thing I would traditionally say like, hey, I'm confident in earnings. I think the way earnings have gone, like we even saw with PayPal, they reported stuff that like I didn't even think that I thought they were pretty good. They beat on a number of things. Like I guess it was their guidance. I guess it was just like general like macro worries. Like so that's where I'm just like Palo Alto is the kind of thing that traditionally I would say, oh, people are responding well to it. Like maybe we want to put it like maybe not in the newsletter but in the model portfolio. It's like the metrics are looking good, but honestly like I'm not even there on it. Like things have been too wonky, and like I think there's too much negativity in the market right now. So I think it's interesting. I think if you like Palo Alto, like if you see Palo Alto Networks, if you're looking at it as a long hold, and you're just like, oh, I'd rather get in, maybe it's gonna have good or bad earnings, blah blah, that's the kind of thing where it's like, hey, you might want to get in before earnings, because if that looks good, like anything that earnings are going to look good in a growth business like Palo Alto has, I'm still in the mode where it's just like I do think this is temporary. We might have a rough market into 2024, but like that doesn't mean that stocks don't gain and that growth stocks don't gain, especially ones that show good numbers. So like I wouldn't bet on it for like a play where I'm like iffy on it. But if you're just like, hey, I got out of it, I was a little worried, or that's a stock on my watch list that I've been waiting to buy, like I think now is the time to buy it, even if there's too much earnings risk. But that being said, like I am obviously of the mode right now where I am not really recommending. Um, I'm not really recommending any buys.
Hmm.
Like I like, and I even talked about this the last few weeks with like Tesla and Meta, where like Meta's net option sentiment did go down, and I was out ahead of a bigger drop, so I'm happy about that. But Tesla did also go down, but it was still like when I dropped it, it was about at 95, but that's low for Tesla. Like, or like at least in my view of like what makes it a strong newsletter pick. And that was obviously a good choice. But like even just like NNOX that's doing bad again today, I dropped from the newsletter. I just dropped it just because like, and the way it's behaving, you really expect it to have bad earnings. But it's just like the way the market is responding now, it is like it's a little uncertain, and it's a little like, we see these big swings in a single day. Like I think it's very hard to play outside of like my macro view of like I like shorting stocks that are bad in Prospero right now. That's the only thing I can like, and I might have to hold it for a little bit. I don't want to do it around earnings because I'm not comfortable with that. But yeah, that's what I'm looking for. And I feel like we skipped one of the things that like segues well into like the AMC trade that I also got very right. Um, and that was one that holding for a while, obviously like a lot of the original Prospero users, well, not original, I mean like the people that I would say tested it came from people that I met through the AMC trade. And so I've known it for a long time. And like the funny thing is, like I said, it's like, wow, this is weird. And honestly, I have never seen anything like what happened with this judge, where she hired a special master and the special master ruled, and then she went against it. Not that anyone ever goes against the special master, but like I would say she seemed very, very hesitant to deal with like the onslaught of retail letters that she was getting. And I'd be scared too. You don't want to be the person that like flubs it. But like what I kept saying with it is like, I'm a little weirded out by the movement and her like not agreeing with the special master and all that stuff. But it's just like, and just to give people more background on the trade, essentially like the CEO of AMC, Adam Aaron, he asked to dilute more, and he had already diluted the stock 90%, which, by the way, from his perspective, was not a bad move because they have billions and billions of dollars debt and not much earnings, taking losses. So dilution is your main avenue there. So it wasn't necessarily a bad move from it, just a bad move if you want the short squeeze, like a lot of people did, or even went as far as believing the crazy thing that he was on their side, the side of retail. So yeah, basically he pretty like fiendishly used preferred shares, which I called out at a certain point when people said he can't dilute anymore. I was like, he does have these preferred shares. So I was on it from the start to create a massive amount of dilution. And then basically he was sued over it. And his idea was to get the votes, which he could because of the way he set up the voting around the preferred shares. It was pretty clever in that sense. And he was going to get the conversion, but basically there was a protest on it. And so, yes, basically I knew that it was going to have to go through because just like no matter how much they protest, if it didn't go through, the company was going to death spiral. Like he needed to dilute. He still has, even everybody's obsessing about how they were profitable this quarter, but Wall Street is still projecting a 22-cent loss next year. And Wall Street creates those based on what the company guides to. So they might even do a little better, but it's not enough to get them out of their still significant amount of debt. And he's been open that he's going to dilute. So yeah, basically like there was no way, no matter how much retail protested or how worried the judge was, she clearly was, like it was going to have, the conversion had to go through because if it didn't, retail would be wiped out in a bankruptcy anyway. So it's just like, it was a good, like, I'm glad I stayed in the trade. And I stayed in it personally too. So it's a good day. Good day for me on that front.
Mm-hmm.
But yeah, it's just one of those things where it's like retail investors, like, and there's so much like so confident sometimes in these outcomes. And it's like, oh, it's not going to go through. Like we're protesting. They would do that to us. And I was like, what do you mean do that to us? They're preventing a bankruptcy by like making sure this goes through eventually. Like they're not doing it. Um, but yeah, I think that that's a pretty like, I think that that's a pretty important point. Um, and like, yeah, I think it's one of those things that, they're going to have to, it's, it had to go that way. And I'm happy it's like ultimately helping my model portfolio, especially. But yeah, I think that that was it's just one of those things. If you've seen these things play out enough times and you actually understand the stakeholders, like it's not that hard to understand what is going to ultimately happen and just like stick with your bet on it.
So at the end of that situation, the ape shares will go away and AMC will absorb them, right?
They will both become like they will both become AMC. It's not really, it's like it's a conversion. It's almost one for one, except there's like a bonus for basically that was like part of the settlement. You get an extra one for every 7.5 AMC shares relative to 8. So yeah, they're not going to converge exactly because of that. But yeah, they will converge. And yeah, it's like it was good, and I was glad to be like I'm glad to be able to help people, and like a lot of people I think in the group are like in the group specifically are like coming out on the right side of that. But yeah, I think that it's like it's one of those things where it's been good. It's been good for us lately. I was actually looking and I was like, oh man. Well, in the model portfolio, the last 15 stocks I put in have been wins versus the S&P 500. But I was looking, and actually in the newsletter picks where there's obviously less. I believe there are what? I'm just looking right now. 53 total. If I had not messed up that that choice of basically PayPal versus Confluent, like I would be on an 18 pick in a row. Oh no, wait, sorry. I would be on a 20 out of 53 pick in a row streak. So pretty nice. And obviously like having the market direction really helps. Like it really helps. And as I said, using both, like picking things that knowing we're going to turn bear and picking bear picks that Prospero doesn't like, that's really setting yourself up to do well.
And all of those picks are a combination of what you're seeing in the macro and the Prospero signals, right?
Yes. Sometimes there's layers beyond that where like I never over concentrate. Like I will over concentrate in tech. Like obviously I had like Meta and Tesla, but they're in like different businesses. But like I don't like some other things that I do is I won't take like two other stocks in like the same sector. Or I'll have a higher burden of kind of proof to put something in if it's in a sector that's just like generally bad. Like all the time, I'll look at like a bunch of biotech at the bottom of like what I'm screening for. And I'll basically be like, okay, unless one of these biotechs is like far and away worse than the rest, I'll grab that one. But otherwise, I'm probably just going to stay away from it on the whole.
And speaking of bad sectors, and I don't actually know how you're going to respond to this sector, so maybe I'm setting you up wrong, but Penn and Barstool Sports and ESPN had a big news story last week. So I'll explain it a little bit before we get into like sports betting as a whole. But so Penn Gaming bought Barstool, the media company. I believe it was in 2021. It might have been 2020 for hundreds of millions of dollars. And with that, they got the rights to use their logos and their branding. And they made a betting app called Barstool Sportsbook. And assumingly, it didn't go as well as they wanted because they then sold Barstool Sports to Dave Portnoy, the original founder, for $1, if that's even like believable. I know there's some kind of details where if he sells it again, they'll get some kind of money from that. But literally every like headline you read, they sold it for $1 back to him. And then they partnered with ESPN, which is owned by Disney. And everybody was wondering what Disney was going to do with ESPN. Are they going to enter sports betting for years now? So that's Penn's next move. So how do you feel about sports gambling sector as a whole and maybe Penn stock from this move partnering with ESPN?
Well, first of all, like how I feel about it, like there's a few different things. Like how I feel about it morally is like, I honestly cannot believe that, like, I mean, especially like when things like the NFL and NBA and those people get involved, when they're so strict about the players gambling. Like that's like so hypocritical. Like I get it, they're involved in the games and whatever, but it's just like if it's like such a bad like thing, then like obviously you don't want them throwing the games, but I don't like I think a lot of the times it's not necessarily games that they're in. It's just like other games.
I think the
So
NFL is the worst because they can't even gamble on other sports in the NFL. I
yeah,
believe I'm getting that correct.
yeah. So it's like it's annoying to me with all this like moral outrage about gambling, and then you're just like pushing it upon other people. Like
Hmm.
that's thing one. I mean, but obviously, like we know it sucks. People love to gamble. It's a growth industry, and it's just like, and it's almost like when people do like the like budget ones. That's like basically a different form of the lottery. That's a very profitable business because they're just like clipping a certain percentage of the pot. Um, Versus like leagues or anything like that or betting a spread where you're like much more close to even. Like honestly, I don't think like that like salary cap stuff like that should be much more regulated how much profit they can take off just basically being like a conduit. um but yeah, I think that like all of that stuff is a huge growth industry because it's just like we see it, people like to gamble.
Too much.
Like a lot of it is because like people's lives are pretty boring and sucky, and they are getting worse. And these little like these little dopamine adrenaline rush things is like all a lot of people have to live for. And it's sad. I hate to be like I don't mean to be like I don't mean to be nonchalant about it. I think it's very sad that like this is the state of where we are. But yeah, they're growth businesses, but it's just like I actually tend to think versus like being like, oh, ESPN got into it. Like, I wouldn't be too bullish or bearish. Like, you might be able to get DraftKings at a discount, is how I might look at it. You might want to see this play out and like let it launch and figure out the right entry point. But that's kind of how I look at it, where it's just like these things aren't all about brand. And a lot of it is like if these like upstart stock apps have taught us anything, it's just like sometimes you have to have a little angle, some better interface tweak, and it's not just about like the brand. Because if you even look at it, like I don't know how well MGM is doing or any of them, but it's just like obviously like MGM, like I mean I don't know how much like relative to let's like look at it quickly. What's MGM's market cap relative to?
I think it's essentially a two-horse race at this point with DraftKings and FanDuel who dominate, and then the rest are kind of like.
No, I thought one of them. I thought DraftKings bought FanDuel. Pretty sure they
Uh,
did.
I'm not sure. I don't think so, but I could be wrong. Yeah,
What was
I kind of agree with you. Like I'm a little bit younger than you, so I'm 24, and I know a lot of my friends who just like to gamble too much. I feel like there needs to be stricter rules on it. Like you shouldn't be able to gamble a certain amount of your income or something. They need to do some kind of regulating with it.
Wow, that's interesting. Even with this hit, like MGM's market cap is like very close, like only 2 billion more than DraftKings. I was like expecting. I was like, actually, to me, that says like they're like uh DraftKings is in better position to compete, like versus MGM because like that's their only business. MGM has a lot of other places they have to spend their money. Um,
Casinos, right?
yeah, that's
Hmm.
pretty funny. No, I was like imagining. I was like, oh look, like DraftKings is still better than MGM, but they have all this money. But I guess DraftKings is a bigger company, which is always like that's why I always look at market cap. It's always so interesting before like it's surprising sometimes,
Hmm.
like how big some of these places can get. But no, like ESPN is still gonna have to compete, and like, but like also like ESPN, like their fantasy app was like way better than the others for a while. There was competition, and it was just better. And like so,
That's the thing that's interesting. Can they just put the gambling right in their fantasy app, like, and have
I
you
imagine they
funneled right
will.
to it?
I imagine they will, and it would be helpful. And I don't know the legalities of this, but if they can do it, it would be really smart to let you bet bet and like prop bet in the app during the fantasy season
Yeah.
against like in your league, whatever. That would be super smart. Like I'm not one for playing that like thing, but totally if I could just like easily like bet like going into like the last games of the Sunday, like close scores, me and a friend, like I would totally like send them like a bet. Like like in that if
Be
they make the
confident.
UI really easy to do that, like that's like because like part of it is like you don't want to have to track that and like blah 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 and all that stuff. But if they just like handle that, um, but no, like that could be. This is all to say, this could be a very big problem for DraftKings because of what we're talking about. Because ESPN can embed it within fantasy. Because they are like they do have a lot longer experience. And I would say a few things. I would say interface building, UI, things like that. They have like they have many years on DraftKings doing that part. And I would also say that that essentially they have like better AI. Like ESPN has put a lot of money into that. So you can, when you have better AI, you can do things like set the lines better, target betters better. Like, they've made a lot of, not only do they have really good, they've made a lot of good acquisitions in terms of, I would say, data sets, like their predictive power, like teams has gotten a lot better. So that's where I would say like ESPN is well equipped to beat DraftKings. But they've got to actually go out and do it. But yeah, I would look for DraftKings at a discount, like maybe like right after like ESPN launches.
Mm-hmm.
If you're saying like, oh, it's trading at like, I would look at it like I would look at the PE and I would say like, okay, is this like a good, like I would say overall value for like a tech company? But I would compare it to like a mature tech company. I would say like, okay, is this looking better than something that like people don't speculate on a lot anymore, like Meta? Like I would look at it relative to that. If you're seeing a better value, it might be worth getting it. But I would use trailing PE in that case, not forward PE. I talk about it a lot. I would be like, I wouldn't be projecting any growth for that business. I would be like, what are they earning already?
Now, I'm not even sure if DraftKings has a PE. I think they lose money. But I wanted to say, do you find it contradictory at all? I mean, it kind of is that Disney, this like family wholesome entertainment company, now is also in sports betting. And even though it is, do you think anybody will care like about it?
No.
Yeah.
Like I think we're like so far beyond that. It's like it's sad, but like not even funny. Like nobody really cares about that anymore.
Yeah. You're
like,
right.
I wish they did, but like, yeah, we've jumped the shark on that, I would say. Like in terms of just like people actually like caring about, like they care about the moral things that their political party tells them to care about. There isn't any real morality anymore. Like it only comes out when you're like arguing for the political cause or against the political people that you want. That's when morality all of a sudden comes into play.
You know what? The only way I think people would care if Disney put it in like right in Disney Plus on like a kids movie, like a link to go into their gambling ESPN app. Then people might care, but that's about the only way I think that it would be an issue. If they keep it separate, it'll be fine.
Kids, people still care. It's funny. We brought on like a new chief strategy officer for Prospero a few like maybe a few months ago at this point, and like yeah, she's great, but all the time she's talking about like doing kids. It's like, oh, well, stock education for kids. I was like, no, we are not going to do that. Like the first time some kid like invest stock on their parents' account, and it's like, why are they investing in stocks? And they have like the Prospero stock education. It's like, we're going to get sued. And it's like, actually, it's not going to be you. It's going to be me. Like, like that being my like securities license at the top of these businesses are not active, but I've got and I always say that it's just like the Con Air thing, like I don't know, 90s movie. I don't know if people know it, but basically like this guy that's like a Navy SEAL or like something, maybe an Army Ranger. I think it's an Army Ranger, something like that. Kills someone in like a bar fight, and then he gets like harsher penalties. But that's totally true. Like if you commit like a securities violation, or you're like something like that, where you're like making it easier for kids to trade stocks, and like you don't have a stock, you don't have a buy side background or a securities background or anything like that, it's a lot easier for me to be like, oh, I don't know. But like you can't use that now. So it's like, I actually tell her all the time. I've heard her say that a few times. I was like, no, we are not educating children. Like, I was like, if you want to do some side project on your own where you fund that yourself, that's great. I would love for children to be more educated, but
Mhm.
like, Prospero isn't going to be doing that. We can educate them when they're 18.
Yeah.
But like, yeah, we don't need to dumb it down for them. They can learn stocks later.
And you mentioned securities violations, which brings me up to my next person who is probably the definition of a security violation in the dictionary. Sam Bankman Fried is going back to jail after he got let out on a $250 million bail because he was found witness tampering. So what do you think of that whole situation? Like, I don't know, the government made out. They got 250 million and he's back in jail now. So it's crazy.
I mean, it's one of those things, and like I have to say, like I generally have a pretty good instinct on people, but he completely fooled me. Like, and I'm pretty fundamentally distrustful of people, especially in finance.
That's
Like, but like I saw him at some of those things, and I was like, oh my god, this guy's like the ambassador. Like, he's smart. He has a physics background. Like, he's like he does his research. He's good at educating people. Like, he seemed like I mean, he was a great con man.
great
Like,
actor.
he like completely. I was just like, what a crypto ambassador. But like, if you're gonna be like literally stealing from people, like, then it's pretty good to have a good face on it. But like, yeah, he's essentially like Madoff. If like, but at least Madoff, like, didn't also add like hubris to his like list
Right.
of faults. Because
Mhm.
like SBF like just like didn't care. Like, there was expenses being approved with emojis on, like, I think it was Slack or like something, or WhatsApp, like some chain maybe. Oh, it was probably like, what is the one that the crypto people use? It's like a T, like Telegram. There we go. Like, who knows? Like, but it's just like, yeah, like, that is like the extent. I mean, he didn't care. He didn't think he was
But
gonna get
still,
caught.
still to this day, he doesn't care. Like he's still doing shady stuff to this day.
Exactly.
It's crazy.
Exactly. I know. It's like it's real sociopath bordering on
Yeah.
psychopath stuff, where it's just like, and honestly, it does piss me off a little bit because I want Prospero to have like celebrity partners at a certain point, and like, I'm worried that they're going to be like, oh, we don't want another FTX. The good news, and I was actually explaining this to someone recently. It was just like, well, like, it was like, what can you do about that? It's like, well, at least we can have lawyers tell their people that we're in compliance with securities laws. Like, the thing was, they were never like explicitly. The thing about crypto is like, it was never explicitly out of compliance with securities laws. They just wasn't regulated yet, so there was no guarantee you were in compliance, and the SEC was making no guarantees about that. So that is the difference. Like, in our business, you can easily like be like, we are a compliant, we are a company that is compliant with securities laws.
Mhm.
So at least we can have that part. But no, I mean, he's a straight up criminal, and it's like so interesting. I talk to people all the time where it's just like, I've actually seen a few people like in like the AMC thing being like, oh, screw this, I'm gonna get this in the crypto markets. And that's really laughable because the crypto markets do not even have transparent derivatives market. You can't see the options bets in there. So if your idea of like a better market for you to have your rights set up for is going into crypto, you are wrong. Like, because you cannot even, at least you could go see who's betting where in the options market. Not necessarily who, but where those bets are. Those are being shown in real time, updated every day in the open interest. You can see that. You have no idea what's going on in crypto. And like, it is super helpful to know, like, before you buy a crypto, if like there's a bunch of options expiring at the end of the week, put options, that like there is a lot of incentive to drive the price down. You couldn't even see that. So that's bullshit. Like, that anyone would think it's more transparent. But like, that is also to say, like, I saw a really interesting, like, I actually saw the CEO of Chain Analysis talk at a Google Cloud blockchain event, because I actually am very interested in especially decentralized finance. But my big thing in it is there's great people in crypto, and then there's like criminal elements. There's always like these unregulated things. You always like attract. You end up attracting the hucksters, basically. So that's a big reason why I'm like not even ready to be associated with it, because there's still too much of like a grifter element in that business. Um, and the issue is everybody's like, oh, blockchain, you can see everything that's happening. And the guy that like basically was talking to chain houses like, yeah, after like we could go in and see like all of the things that he was likely like we look at Alameda, which is his hedge fund, and then like he's like, you could definitely piece together that there was some shady stuff going on. But like the problem is like you don't know where to look, and you can't look at everybody like that. And this is an interesting point about AI. Like they have great tech, but it still like doesn't. AI still requires you to label a data set. Like it doesn't just know when there's fraud. It only knows when there's fraud because you give it examples of fraud. It knows what to look for. Like as long as people like until there's more examples of these frauds, like even an AI searching every transaction on the blockchain doesn't know what to look for. Mm-hmm. So that's a very important thing. So all the transparency in the world doesn't matter if you're still doing that. But I just think it's so. I forgot what like the director was like a meme or something about it when it's just like when it was just something like like this is like everybody says crypto is not real finance. It is like because like these guys know how to like rob the American people as just as well as like the big banks like cool. But yeah, it's like the nice thing, and that's ultimately like why I say like the reasons I just named are why I say don't like I wouldn't. We don't recommend crypto like because I've even gotten like information about like influencers working together to pump things and like having communications about it. Which, by the way, for all your conspiracies about the market, like a bunch of hedge funds would never get together and communicate around manipulating something. The robots might do it in an automated way, and I have no problem saying that. But like nobody's like plotting with influencers to like pump stocks. Oh, and they might, by the way, use what I would call positive shills as well. Like everybody thinks like a shill is someone designed to like get you to sell a stock. No, like they are also people feeding you narratives to make you buy these like short squeezes so they can profit. We've talked about that before. But no, like crypto is the only thing that I've heard where it's like whales and influencers are all getting together to like, communicate around manipulating a stock, buying options that you don't have visibility to. No, it's just like, it's like, it's like putting your money in a bank in the Wild West, where it's like, oh, like, yeah, you might see some good returns, maybe like investing in like a gold mine out there. But there's also no guarantee that like some bandit doesn't come in and like, well, either like, and just take your shit. So yeah, that's why I don't really like that. That's why we don't have it in the app. Like, but I'm always looking and I run models like just to see the efficacy. But ultimately, like I'm not interested in something that's like so overtly manipulated and non-transparent in the derivative markets, because like anyone that's listening to me talking, obviously a big way Prospero is built, it doesn't even matter if everything's on chain and you can see every transaction. What moves the markets is the derivatives transactions, because those are the ones that if you see them happening, if you see where options bets are happening, you can actually get in front of where the trades are happening. So yeah, that's more of the leading signal. And yeah, that just doesn't really like, it doesn't exist in crypto. And SBF is a crook and like a really horrible person for like, betting his customers' funds the way that he did and doing like the classic like banker bullshit where like the more he makes, the more he bets. He doesn't even want to just be like, oh, I've gotten pretty lucky with all these profits. He's just like betting more and more and more until he was essentially destined. He was destined to blow up because the amount he was just further, like he would have these wins and bet more. So
I think he comes from a fantasy world because I'm pretty sure his parents are like professors at some Ivy League school. So he probably just felt untouchable from the day he was born and never really, I don't know, he probably lived in a fantasy world. But to play on your Wild West theme of what crypto is, so the Wild West developed into society today. So could crypto develop eventually into a place that is nice? For example, PayPal launched a stable coin called PayPal USD. Now, I'm not exactly sure how that benefits PayPal in like making money terms. I'd imagine they could see the way the money's moving and have some data that would be valuable from it. But when companies like that start embracing crypto or, I don't know, stepping their toes in it, is that what you need to see keep developing for crypto to become a place that's better in the future?
Um, well, why like DeFi, decentralized finance, especially, or anything decentralized and blockchain? Let's separate those two things. Um, is because obviously my personal philosophy is it's going that way. Like people have more and more power, the more the world is run on their personal data. And that gives them leverage and they're going to demand better things. So like I think those trends are here to stay. But like what I don't necessarily know or like have a bet on is like if it's what's around now. Like that's my biggest problem with like Bitcoin. Like I don't know if something better is going to come along. And like basically like even Ethereum, my smart engineer friends tell me like it's not that much better and something better is going to come along in Ethereum. And I personally like when I was looking at crypto stocks, I'm a value investor. I did everything from try to like I did everything from mining to which I thought was going to be the harder part, but mining wasn't really that tough. But what was tough is like taking my mined coins and like converting them or like to Matic, basically taking like this like stuff like Bitcoin that I mined and converting it. Like I ended up paying like tons of money to just like get it over and like I didn't even get it in the right form. I'm pretty smart and I have some coding ability and that was way too complicated. I'm like, if I can't do this isn't there yet. So yeah, I think there's some of those obstacles. It's just like we don't know what's going to win. Where it's just like if I imagine saying that about like a company, I wouldn't want to buy it. It's like, well, yeah, Amazon's like great, but like we don't know if they're going to win. Like I don't want to buy that. Like I don't want to buy that stock. It's like there might be a better Amazon that comes along. Like obviously, I do not believe that. I love it. Like I love Amazon as an investment, not so much as a company. But it's like little things like that where just like in stable coins are like ultimately like. I don't know why like the U.S. government wouldn't eventually be the best stable coin
Jerome
there
Powell
is.
has said they're working on it.
Yeah, no, but what I'm that the U.S. government.
Yeah.
Yeah, so it's just like I don't know, like maybe PayPal's a conduit at that point or whatever, but like I the government makes people play by their rules. So like that's why I'm like not maybe that necessarily excited about PayPal's. We'd be like, nope, you can't buy PayPal. The only USD stablecoin that you can buy now is the US government. Sorry. Like, maybe US government partnered with Goldman Sachs. Like, it might be that, but it's just like that's exactly what I'm talking about. Like, it's just like one of those things where like, yes, it is gonna happen. Blockchain is I just think a better way to do it and something that's gonna like happen more and more. Decentralization is something that's gonna happen more and more. So I believe in all of that stuff, but like, is there anything that like I think is like a current winner? Like it's like, and it's great to draw this parallel. It's like, look at AOL, right? They were like the internet thing, right? And they like lost pretty quickly as more people came. So like, I don't know if Bitcoin is AOL. Like, strong early start. Everybody like says they're the best. Like we haven't seen enough to know if I'm basically buying AOL. Which is why if I do for my crypto blockchain exposure, I do buy Block, which is BLOK, which is just like broad-based blockchain crypto exposure, everything from like miners to like PayPal and Square are in there. Like that would be my recommendation because it's just like it's the same thing. It's like if I didn't know, and back to the Amazon example, if I didn't know Amazon was going to win, if I was just like, oh, like I'm like I like the market overall, but I don't know which stocks are going to win, I would buy Vanguard Total Return or SPY or something like that. And that's basically what I'm recommending here with Block until I'd have more clarity on the winners. Like, and by the way, like maybe if you're like deeply embedded in the world. And like when I say deeply embedded, I mean work as an engineer there or like know the players behind the scenes or whatever. Not that you've like been on Reddit crypto forums for 3 or 4 years. I don't believe those people at all know who's going to win. I would stay away and I would just buy block or I would buy some other diversified um, instrument.
Mm-hmm. Okay, so we'll move on from crypto for now. Maybe we'll come back to it in the future, see if anything's changed there. But the big news of the past week, which is on our banner today, is that the USA was downgraded from AAA to AA plus, and also credit in the USA, I believe, hit over $1 trillion, and it was an all-time high. So, seems a bit unstable, huh, George?
Yeah, I mean, I think what I said to you earlier today was like, and this was not even my words, but I was like, oh yeah, I really agree with that. Someone said online, they were just like, I don't see the main drivers driving the economy up right now. And I was like, or the main buying forces or something like that. And it's just like, yeah, like I see a lot of negative things looming. And that's why, like, in addition to the options, like I always think about these things. And like I would say any good trader, investor, it's like I'm looking for the various parts of my analysis to be congruent. That's how I gain confidence. And when I see lower option sentiment, I see, personal credit going to an all-time high. I see, kind of unresolved things with inflation rates. You can call those incompletes. Like, if not, like we might have bad news coming because like people are now expecting cuts, I think. But like if something changes, that could be a catastrophic event. And like, yeah, that's how I'm looking at it, where it's just like I don't necessarily see a lot of things on the horizon that are going to make people be like super bullish. Because like if you look at AI, right, we've already talked about how that looks super overvalued, and I'm very bullish on AI. A lot of people are, but like I honestly think it's like before I'm like bullish in terms of wanting to buy those stocks again, like I would need to see the value. I would need to see them get a hit a little bit, I think. So yeah, it's like it's a pretty tough, like it's tough to be optimistic, I would say, in this market. And like I look around all the factors, the personal credit's like really worrisome. I think like one of the things that we saw obviously is like Chipotle, um, starting to report like some scary earnings for people. And so like that's where I see like, oh, like, because like I don't think people are like, oh, I can't have Chipotle, I'm gonna get McDonald's instead. It's a little cheaper. Like I think what people are saying is like, instead of going out to Chipotle, I'm just gonna cook or eat or whatever at home. And so if we're starting to see that, we're already starting to see tightening, in my opinion, and that's really gonna hurt like earnings. I think coming through the next, and that's what people are worried about when I talked about a recession. And like the other thing, I almost put this in my newsletter, but I ended up not doing it because like yield rate curves can like really confuse people. But basically, like we're in an inverted curve right now, which basically means yields on shorter duration bonds are higher than longer duration bonds. And basically, like there's a pretty reliable relationship between that occurring and then before that changing, which it always does. Eventually, it's always going to get back to a point where it's like rates are low and there's some, and there's some basically increase like priced in because of risks. They don't know what's going to make inflation go back up again. So they're pricing in some risk to the model, whereas like short term, there's less risk because they know in the short term, there aren't as many reasons and the rates are in like a good place right now. So yeah, basically like there's a pretty reliable historical pattern of like by the time like this inversion ends, there'll be a recession. So we are in weird economic times, but at the same time, I think that's part of what you're starting to see. And basically, like the inversion ends as the rates start to come down. So we're starting to see increases, decreases in those estimates. So yeah, I think that's one of the like main macro concerns, and where you kind of put it on a list of macro concerns. And like I don't necessarily see like a lot of upside. So yeah, I definitely think that's a concern, especially in light of the fact that one of the things that I talked about in the newsletter was I actually like to align, and we're actually right about where we were trading in terms of forward earnings pre-pandemic. So basically, if you look at it from just that aspect, I'm just like, oh wait, like the economy overall was in much better shape before the pandemic, and us like like basically spending our way out of it, getting inflation. Like we were in a better position and like in a longer term bull market. So like if we're priced about the same as we are there, it to me that says like we're still overvalued relative to all of the risks. Like everything could go right, we could get the soft landing, but then like we're priced about right where we are. So basically where we're like all of like the downside that I'm seeing is any of those risks occurring. And I think there's a good chance that there'll be like, some actually occurring. And, I think that's going to lead the market down. And like, yeah, like we're saying, like, well, one of the things that's nice, and we shared a really cool graph where like I hadn't even looked at it, but in the past month, basically any big downswing in the SPY or QQQ, like net option sentiment was ahead. So we will keep an eye on it. You should too. If you see any big changes, I would say the numbers to look for is like if you see SPY net option sentiment go above 10, 15, QQQ 20, 25, then we might at least get a little bear. I mean, we might get a little, bull correction. But overall, like if we get that, I might just look at it as an opportunity to short more. I might clear out some of my shorts as I see that number go up and then short more when I think it's reached the top of that. But yeah, I just, unless we get some big changes, I don't see how we're going to move off of this, or I'm going to wrap my head around moving off of it.
Mm-hmm. So my only question with that whole situation is, and I think you kind of mentioned it, is like, can all of these concerning factors play out in a dull manner where you kind of just, the stock market does nothing until the conditions are better for it to go up? Or do you see where it needs to have like a sharp decline of some kind at some point in the future?
I don't think it has to be sharp. But yeah, like, and that's the thing, like, it could be to a point where it does see some decline and then we see more bullishness and we see more options bets and we see more tech options bets and we change it. Like a lot of these are like, I would say I really don't expect to see that unless we do get a bit of a decline. So yeah, basically I would need to see some price decline. I think I expect to see QQQ net option sentiment where we want it to be. But yeah, I'm always open to seeing something different.
Mm-hmm. Okay, so our last segment of the day, I wanted to talk about a little bit about Prospero's future because it was really eye-opening to me, and I hope some of our viewers got to see. I believe it was 2 weeks ago, we had users of the app come on and share their experiences, and it was really eye-opening how like beneficial Prospero has been for them in their investing journeys. So I wanted to get your input on where you see Prospero going in the future and how it's going to continue to help investors for years to come.
Yeah, I think that like what I love about those videos too is you can get to see like all of the different types of people that Prospero can help. But yeah, I would definitely say that that where we are now, we're very much trying to just like slowly release high quality features. We're pre-capital, like we've only raised a small amount. I think I think our seed round should be coming soon, so that's good news. And the reason that we're very slow to release features, and I hear people all the time asking for features we really like, but yeah, it's something that is just tough to do when especially quality control is so important to us. But like some of the things that we want to do is we want to make alerts more prevalent. And, I do think it's important to add color on alerts because a lot of people are just like, I want alerts for my watch list. But part of that, and one I think a very interesting story about how we build Prospero is like, we don't necessarily give people what they ask for if we don't think it's what they're really going to want. Because the story there is that a lot of people early on in Prospero were like, we want buy, sell, hold ratings. And I was like, I can make those. But like before, let me just see something. And I basically asked them like what a realistic hit rate on like a buy rating would be for them. And they were all like 60, 70%. And like, yes, like especially in our newsletter, we're above that. But that is also like curating like the signals even more. to stuff like high conviction things. So like people expect that just like logging onto the app and seeing a buy rating. And the reality is like being right 51% of the time as a hedge fund is really good. You could start a hedge fund on that. So like that's just something where like they actually don't want that product because people are not comfortable. They want it to be that easy, but it isn't that easy. They want to just be told what to buy and like buy it and have it work. But like that's not how it works. It isn't that easy. And that's one of the reasons we have 10 signals. Because it's like, no, you really need to pay attention to all of it. You can't just boil it down to one thing, and you do have to watch this stuff a lot. So I would say that that's an important thing in thinking about how we think about alerts. So we're going to start rolling out alerts in the sense that we're going to fire off on like known things. Like basically, we actually have a net option sentiment alert that we're really excited about that basically flags a 10% or more moving average. Or sorry, a 25% or more moving average difference from the 7-day. And that actually, if you hold that alert, it's about 100 stocks last year for 24 hours. It's a 530% return. And like, yeah. And that what's crazy about that is like, I spent, before I actually figured out to do that, said so many people, it's like, oh, like net option sentiment is like tricky and you have to get to know the stock. Like, well, I said all that, but it was like, eventually I said that enough times, people was like, oh, what if I just like looked at the moving average of its own stock instead of the absolute value? So some of that stuff is just like process. But, you know, a lot of people say they want alerts, but they don't necessarily really want alerts. Like, because if you have a watch list, if you have 10 stocks, right? You could see a net option sentiment in a stock that's volatile or like more thinly traded options. It can go to 20, 80, 20, 80. And like, so nobody wants to get like 20 alerts being like, it's less than 50, it's greater than 80. Like, you know, that's not a good product. That's an annoying product. Like, so we don't want to do that for people. And that's just a perfect example of like, we need to make it more intelligent. We need to make it more useful. Because sometimes what people want is not what, and they ask for is not what's really going to help them. And so that's a really good example of even like alerts we're working on. We're going to roll out a Discord. We're doing a really cool like crowdsourced model portfolio thing right now where I'm recruiting people that are going to like, you know, essentially get free product to help me run it. Because I do want it to kind of be like retail owned and retail used. So like that's something I'm really excited about. We're going to roll out a web app. Like longer term, like we have some really interesting plans, I would say, about helpful tools to learn about investing, especially leveraging generative AI. And you know, we have some cool like some cool like specialty things. Like in the same way we look at net option sentiment, we want to look at like volume weighted average price on the dark pool and trends there to help people with like another kind of trading signal, as well as kind of these multi-signal things. We want to improve our net institutional flow. For a long time, we've had this cool thing called shark rating, where we'll basically like let you know who owns the stock and like how sharky they are in terms of how often they roll over their positions. And like, you know, obviously a high shark rating is not necessarily good on something that, you know, you want to hold long term because you think people might be trading out of it versus on like a low shark rating where you're just like, okay, these are my people who are going to hold long term with me. And yeah, there's a lot of really exciting stuff. Long term, we actually want to have a high yield savings account. And the really cool way that we're going to do this is that we're going to be able to offer people something like 9% because we're going to use alternative data. So data that we ask people, like be able to ask them questions like, what's your temperature? And then we could be able to model that in real time into the predictions and essentially be able to do what the US senators did when they were looking at hospital data, reassuring the public and shorting the market because they knew a pandemic was coming. Like we could do that, but get ahead of them and be in people's homes. And instead of like letting that information being selfishly hoarded and gained by a few people, we'll distribute it as a public good. And that incentivizes more people to give us more data. But, you know, we also recognize that those kind of high risk trades, hedge fund investing isn't for everyone. So that's why we could offer something like even like a 9-10% like savings account, have that insured by other people that we allow to participate in the upside of the trades that are more suited for it, but are also going to insure this savings account, and everybody wins. And we'll be able to like even people that don't like want to have risky investments and just want to know exactly how much they're going to make, but like get the kind of returns an institutional investor would. Like that's the kind of thing that we want to bring to people. So yeah, like those are just like a few different things on our roadmap, but we have tons of stuff in terms of financial education, better tools around that. We're going to have better onboarding resources, starting as we, and educational resources to learn how to leverage the signals faster, and even just like tracks of people that like to do more day trading, people that want to invest, more long term and have strategies already, or people that just want to learn about investing and learn strategies. Like all of that is going to be a pretty, kind of holistic journey where we start to build out like, things like an alert or a Discord where it's even just like, okay, some of these, products are going to be built more towards certain types of people, so we can, bifurcate a little more than that. Because the crazy thing, everyone from beginner investors to expert day traders and pros use Prospero. So obviously it's great that we've built something that is like so multi-purpose, and that it can help all those people. But obviously, like tailoring some of the experience to people better that can help more is really important to us as well.
Yeah, that's all amazing to hear. I'm super excited to see all of it develop in the future. I see we have a couple people watching. If anybody wants to ask a question quickly before we leave, if you still have time, George, or if you have to go, but
Yeah. No, we can hold for questions. We've been getting more lately.
yeah.
Uh, I was a little nervous. We just had one more person pop in. We're asking for questions as a last thing. If anyone has
By
any.
the way, just a note before we leave, or if there's any questions, I don't know if you can see your camera, but it's so fun. Or it's like tracking you throughout the whole live stream. It like changes the zoom. It's funny. It's cool to see.
Yeah, I love that. That's my
Yeah,
AI camera. It's
yeah.
great. Yeah.
What is it set on? Is it keeping your head like the center of the screen or
It
something?
keeps everything in focus. Yeah, it looks like it looks like I have like a camera crew, right?
Yeah.
Yes. All right. We have no questions. So we're gonna, well, before we go, I think I'll just take like, because I did think the movement was interesting on the option sentiment. So I'm just gonna take one more look. Maybe I'll get in the habit of doing this. Just see one more look. Yeah, QQQ is at 10. It was at 11 net option sentiment. Let's check SPY, and then I'm just gonna take a look. Why
We'll
not
come
check the watch list
we'll come up
and
with
see
some
if we
kind of
have
live stream
anything?
indicator. See
What?
if we boost the market when we live stream. If you
Yeah,
invest
SPY
in
is
the
at
market
6.
every time the Prospero live stream starts and sell it when it ends, you'd be up 12%.
Yeah. Um, Nothing looks particularly interesting. I think it's interesting to see like SeaWorld. It's very low on social sentiment. I don't know if there's anything going on. I don't know if another orca killed a person. Um, uh, but I don't know if this is a good thing to
That's
talk
not
about.
fun.
All right, we got no questions. We're gonna end at the orca murder joke.
Good place to stop.
Yeah.
Alrighty.